The biggest risk right now isn't missed payments, it's what homeowners are sacrificing to avoid them. Hey friends, Becky here. Welcome back to your weekly mortgage brief. A new Equifax report is showing mortgage delinquencies are starting to rise in parts of Canada as borrowers absorb higher payments at renewal. But the full story is much more nuanced than the headline suggests. Yes, mortgage debt increased in the fourth quarter of last year. Missed payments have been creeping up in certain regions, particularly Ontario and British Columbia, where home prices and mortgage balances tend to be higher. That renewal payment shock is so real for many households. Here's the part I found really interesting. Canadians aren't waiting until they miss mortgage payments to adjust. They're pulling back their spending first. The report showed credit card balances did rise during the holiday season, which is totally normal, but spending increased far less than in previous years. In other words, people are tightening budgets, cutting discretionary spending, and prioritizing housing costs. Most homeowners will adjust lifestyle spending long before they fall behind on their mortgage. Another encouraging sign is that early missed mortgage payments, meaning borrowers who have just fallen behind, appear to be stabilizing compared with the previous quarter. That suggests financial stress is present, but it's not accelerating. Okay, this next part I think is really cool. The report also highlighted something important about younger homeowners. They're often considered more vulnerable because they have less savings and less equity built up, especially if they purchased during the pandemic. But interestingly, younger borrowers are showing strong resilience by adjusting spending habits more quickly than expected. Way to go. We're also seeing more borrowers shopping their mortgage at renewal instead of automatically staying with their current lender. And this makes sense. Even small differences in rate, product flexibility, or payment structure can make a meaningful impact when budgets are tight. So, what does all of this mean if you're a homeowner? I think the biggest takeaway is this. The renewal wave hasn't turned into the crisis many feared, but it's creating pressure and planning matters more than ever. This is a time where understanding your options, reviewing your mortgage structure, and looking at your long term goals can make a big difference in how comfortable your renewal feels. If your renewal is coming up in the next 12 to 24 months, this is the window where proactive planning gives you the most control. Thank you so much for being here. See you next week.